Hey traders, what's happening? Jamie Setley here. Happy Halloween. SB Trade Desk, Halloween, October 31st, 2018. And before we get started, as always, let me know that you can hear me and that you can, of course, see the screen. Start here just a second once I have confirmation. Yes, Ziad. Okay, great. Anybody else? Anybody else? Can you hear me? Can you hear me? I'm assuming you can, but I don't want to be talking just to Ziad. Okay, Ty, great. All right. I think we're good. So I'm just sitting here talking to Mike this morning, and it's like we're talking about the dollar and or the euro specifically, but I guess the dollar generally, but euro specifically, and it's just like how annoying. I wish it would just tank the euro or the dollar just rip, but this drippy, slow, annoying type of leak. I don't know what you want to call it. It's like a dripping faucet or something. It's just the worst. So in any case, we're back to looking at the same things we did last week, folks. We talked about the possibility of getting essentially a flat, right? Remember, three down, you're getting three up, and then you get a big C wave down, right? So if that's underway, remember we had kind of pinpointed 97.87 as a level. Um, Frankly, I thought we'd be there by now if this was going to happen, but market has its own schedule. So 120, the 127.2 extension, if you recall, was that was the level that I want to keep this up cues here because I want to make sure if we get to 167.81, I'm in some shorts right now and I want to be able to get out. We just hit that level, as I said, 170.90 for resistance. S&P also into some resistance, but fast markets, so you got to keep your head on a swivel and pay attention, right? So with DXY, so we have the 127.2, which is a common extension level for, B waves, right? So if this is A, B waves a lot of time will travel larger distance, larger distance than wave A, but a lot of times you will get to that 127.2. And we thought that was really cool because the 618 of the entire drop from January of 2017 was or is 97.87, which happens to be the high from June of 2017 as well. Okay. What about if we put on a two equal legs here? Two equal legs, we're actually already there. Okay. So, any sort of strong evidence, daily reversal, 4-hour reversal, what have you, would be something that I think we'd pay attention to and, basically call this a false breakout. I know I've mentioned in recent notes, Twitter, and maybe in the swing updates, I know that DXY, the DSI, right, the daily sentiment index, I know is something on the order of like it was in the 90s a couple days ago, and that was over here. That was last week. So we've rallied each day this week. So I can imagine that it's only higher at this point. It sets up really well, right? You start questioning yourself, and right when you do that, it's usually the time that the market's going to turn. I've talked about that a lot. I also think this experience with the dollar over the last, say, couple of, well, I wouldn't just probably a lot of this year, but especially since the summer when we kind of thought we were peaking out over here and it just can grind higher and then you tank and then grind higher. It really drives home the massive importance of simply, you know, having patience and risk management, right? It doesn't, your analysis frankly doesn't matter a whole lot if you have shitty risk management and if you have, the inability to wait or the inability to position correctly. Those that think they know what's going to happen and just go all in with a big trade, those are the ones that blow up time and time again. And they're not around to trade when the move actually does happen. So just kind of wanted to get that out. Ty saying, how do you trade DSI here? Well, I don't so you really trade DSI. DSI is a sentiment indicator. It's a short-term sentiment indicator, and you can use it as just another tool, right? So there's a lot of things out there saying that the dollar rally is a bit stretched. COT is one of them. COT would be kind of a longer-term sentiment indicator, but DSI would be a short-term one. And when they line up, I think you get a pretty good indication. Just like when you're looking at, say, news articles, if we were to look up, I haven't found any. Frankly, maybe that's what we need is a good bullish dollar headline in the journal or something. If anyone comes across one, let me know. Maybe that's what we need. Anyway, so I'm on reversal alert, now, frankly, but it could be as high again as 97.87. Okay, so we traded 97.20 this morning. You're talking about 70 ticks higher, roughly. Really not that much higher, but can imagine what it would feel like if we got up to that level. So let's see what the channel on the dollar looks like. See, in the dollars also, we're also pretty much into the channel top, aren't we? So we'll follow this and see what happens. But on reversal alert, so to speak, right? Okay, let's go to US dollar, the FXCM one, and broadly speaking, kind of have a zone that we're sitting between right now, right? So this zone is going to include your high from February of 2016. Okay, that was the low as well from December of 2016. It's going to include within this is the high from May of last year, 2017. Okay, we can throw that line right there. And on the upper end of the spectrum is going to be all the way up here, which is going to be your April high, is 12,388. And that's also pretty much on the median line of the entire channel from 2011-14. Okay, so it's a pretty big move to get up here. It's similar to DXY. We are into the bottom of what I would call a very important zone or range that starts again with that high from February 2016. But the upper end of the range would be awfully painful if you're a dollar bear. What would make me, I guess, say that we've finally turned the corner. Really, it's kind of I'd like to see below here, right below this parallel, which essentially would just be at this point a drop under this week's low, right? That's right here. That's Monday's low. So, you can set an alert on that to alert you to when it might be time to go the other way, or chase a breakdown. I will say too, you've got, I don't know, pay attention to that 12,334 level. At this point, I'm kind of laying in the weeds, right? I like to compare trading sometimes to, like an African lion hunting, and you are just waiting and waiting. You know that you're never going to be, you're not going to be right all the time. In fact, I'm probably wrong more than I am right. But still can make money by waiting for your opportunity and sizing it up right and taking action when it's time to take action. Frankly, it's been a bit, I don't know, quiet in FX lately. I guess the FX markets are playing second fiddle here to the equity markets, but that'll change. I haven't seen a period in history when equity markets got this volatile and the U.S. dollar and currencies were this quiet, and I don't think it's going to last. So, kind of at the, again, bottom of the zone here for resistance. You've got 12,334 would be a level to know, and finally 12,388. Fib wise, I know we're through the 618 already. Yeah, so where would the 786 be? And that's going to be all the way up at that 12,388. So again, that does seem like a stretch to me, but certainly a possibility that one must respect. Okay. All right, moving on. Let's go to euro. Not going to spend a whole lot of time on euro here because you know where I'm at. I'm still looking at this as a massive retest of a massive breakout. The first retest successful back in August. We were right back to it. By the way, we're on the 200-week average. Yep, Ty's got a good one. High vol follows low vol like night and day in the markets. That's right. Absolutely does, right? It's kind of like the commodity thing. Like, there's no cure for low prices like low prices, right? It's like there's no cure for low volatility like low volatility, because then it gets so low, everyone gets so complacent that it doesn't take much of a shift to all of a sudden turn things around. So again, with what we're looking at here with DXY, this is the weekly. We're still sitting right on that presidential election 2016 level. Again, that's basically 113 at 112.99 if you want to be specific. But the low here, 1301 in August, and we're essentially right back to it. And I will note that no, we have not gone through the low yet. So as silly as it may seem, we do have a divergence still in place with US dollar. I mean, it's crazy to think that we're not going to break the low. I mean, you're 10 ticks from it, this morning. So would think that it breaks, but we're waiting for evidence of a turnaround, right? This is the chart that we had followed. I had last week and actually looked at it during the webinar last week as well. And two things here. One, you can see from this how much stronger DXY has been than euro has been weak, right? Remember when we drew that channel on DXY, we were essentially already pressing against the channel resistance. We have yet to get really close to the channel resistance in euro. We're still treading water here, within really kind of on the 75 line for the most part. We haven't even gotten there yet. So, the level for DXY, remember, we already made two equal legs at 97.13. and we have yet to get two equal legs in euro. That would be at 1235. So that's a level to pay attention to. And then the other level, the 618 of the entire rally from 2017, along with your 127.2 extension, right? Calling this ABC, ABC. That's going to be 1161. So there are two levels that we need to hold out for, in my opinion, to try to get long euro or wait for a low or whatever, and that's 1235 and then the zone of 1161.87. Okay, so you might say, well, why wouldn't we just go short in anticipation of that getting here? That's, everyone's got a different style, okay, and that's fine if that's what you want to do. I'm not here to, tell you to trade exactly like me, but for me, we are so stretched on the sentiment spectrum, right? As noted, that a quick reversal to me it could happen before you get there. Okay, so if we start to make a bottoming process here, got a sharp reversal up, maybe get back into this 1430, pull back, find support within the fork. That to me would be a long setup before these levels. Okay, so in order to see, or in order to get an entry on the long side, you'd have to see something like this, right? You'd have to get a quick shot higher, okay? And then ideally you come back and maybe you find some support on the median line or maybe just a little bit above, okay? So again, barring that action, barring that reversal evidence, as much as I would say that I am bullish, right, euro, or bearish the dollar, I can't act on it because I just don't, because at this point it's just a guess, right? It's just a guess at this point. Okay, so that's where my head's at with euro and dollar. Let's look at dollar Swiss is interesting because it's a breakout. I mean, remember this is on the long-term page. I've got to go to log scale. Okay, here we go. Hold on, I'm going to throw a nice little parallel on here. Okay, so here's our long-term page, or long-term chart that's on the long-term page for dollar Swiss. And you did hit kind of an interesting level here today, right? It's just across the highs. This actually goes back to October of last year. So this is October last year, May this year, and then July of this year, and right now. So you are starting to see some, you are starting to see some reaction on this. So, how many people, Twitter is on fire with dollar Swiss and the inverse head and shoulders, at least on my stream it is. So, look, not saying that that's not a valid interpretation because it is. What I'm saying is that how many great, amazing moves come out of, false moves or false breaks, right? Is that what we're seeing here? Is that what we could see here? So, if you get a drastic reversal up here in dollar Swiss, you could, call this a false breakout, right? And eventually false breakouts, failed moves lead to significant moves in the opposite direction. So that's where my head's at there with dollar Swiss potentially, okay? Just going back in time, this is kind of an interesting center line that you've got going on with the Swissy. All right, so not going to spend a lot of time there. Let's move on to cable. Okay, daily chart on cable. Cable's pretty strong today. In fact, you've got, if you were to close up here, say up near 128, which is where you open the week, but if we were to close up there, you would have a candle pattern that it's one of the only candle patterns that I actually really like to pay attention to, and it's called a tweezer bottom, right? Tweezer top would be the opposite. It's essentially where you have, for the most part, the bar is the body, right? And you trade most of the bars of the body, and then you open or close near the low, and then you open near the low of the last bar or this bar, and you close near the high. Okay, I have some pretty good examples of it on weekly charts. I could show you like an Aussie weekly chart. I remember a tweezer bottom back in right here, actually in 2016 at that low. You had a couple. You had one here and one over here. Okay, so those are decent examples, I guess, of what I would call tweezer bottoms. But back to cable, we're going to keep this simple. I want to, this 127, call it 127.90, 128, okay? That to me is kind of an important spot in terms of just general bias, trigger, whatever, right? I mean, look at all the levels that we got. Boom, flash crash below it, right? Remember, that was October of 2016. How time flies. Breakout, consolidation higher, support, okay? So basically, you need to be above there. And getting above 127.90, let's call it 128 to be safe, to me would be reason to be bullish, okay? Or reason to trade from the long side. So here's now a 4-hour chart, and you can see cable up through its, its center line, which, that's certainly a positive. So if you look at even a 60-minute chart, we go real short term here. I mean, you can see maybe a little 5 waiver here on the upside. Don't want to pay too much attention to that. I want to be just kind of focusing on the level at this point, and I want to see us up through, up through 128, settle above their daily close, something like that. And then we would have reason to look on the long side. And this is big because tomorrow's, tomorrow's BOE, right? So BOE tomorrow, and if we can get up here and close firm today, I'd be looking for support on BOE tomorrow, probably back on that center line on a spike, right? See if you could take advantage of a quick move lower. All right. What's going on here with, you can see what just happened with the Qs. We just came down to the weekly opening price, 69.12. Let's do some commodity currencies real quick. Long-term Aussie, this is on the long-term page. We're sitting on kind of a pretty important level, in my opinion. Longer term, that's really all I can say about that. That's, pretty clear. Long-term level, looking for us to pop out of here. Short term, we are positioned. That's all we can do is get in, minimize risk, and let it work or not work. And at this point, it started to work, and then it's done nothing, as has been the case, it seems like a lot with FX recently. But the median line is clear. I mean, we know where the levels are that should give way, and that level now is basically 71.25. So you get through there, you're looking at 72, probably where I'd be wanting to get out, because at that point you probably have another pause, right? Excuse me. Also, this little inverse head and shoulders here, you can see the target for that is basically 72. It's 71.97, right? So that's another reason to either get out or tighten the stop significantly at 72. Although if we were to break out through here, get 72, then I'd probably be wanting to re-enter at some point on a retest back here somewhere, right? That's where I would want to be getting out of 72 and give yourself the ability to buy or buy even more at a lower level. So yep, we're sitting here just waiting on Aussie to either get up out of here or go back towards the bottom of that channel. And if we did go to the bottom of that channel, I have that 69.73 level there. That's where your next level would be for a potential low, and that would be this level right here. Okay, you can see there, that's the February 2016 low. Big spike low down there, and does intersect with kind of the channel support or channel level that has been has been support off and on since June, right? Good lows here, good low here, okay low here, some lows here, not quite getting there last on the 26th on Friday, but then the big reversal. Heading into the European close here, we are getting a little bit of a dollar reversal. Could it be the beginning of something, or is it just BS end of month? All right. How about Kiwi? This is the long-term chart that's on the long-term page in Kiwi. And again, very much like Aussie at a big spot, but you also have this fork, the long-term fork here from back in the 2011 high. And what I like about this one is that you can see the equidistant parallels from the median line, okay, have been pretty important throughout the last couple of years. So this is 2015. Basically, since 2015 on, you've had big support, big resistance, support, right? Resistance kind of went away for a while. Support last November, and then support again just a couple of weeks ago. And that is Kiwi trying to, I think, base off of this level, which again is pretty significant and pretty important. Okay, so I'm looking for Kiwi to move up out of here as well. And our shorter term chart, the 4-hour chart, this channel still is the thing to look at or follow. And you can see that we continue to fail right up on the 75 line. Kiwi trying to base right here. Maybe if we get lucky, we can get 65. That's the center line. Otherwise, we'll just have to try and chase higher on a break. Okay, but Kiwi does seem to be maybe trying to base at this long-term support, right? You've got a nice impulse higher, right? 3 waves down, trying to put in a higher low. This is a higher low, but it's not really confirmed yet because you don't have a higher high, right? So you need higher highs and higher lows to stop the downtrend, which we don't have yet. And if we can get that, especially if we get up out of this channel, then you've got something really to work with. The channel, by the way, is going to be 66.25 or so, which is interesting because that's where we opened October. Of course, October is just about finished, so we'll have a new month open starting tonight. All right, so dollar CAD, and then we're going to go into equity indices and dollar yen, which kind of go hand in hand right now. So that's where we're going to be looking. All right, so here you've got dollar CAD. This is from last night, same chart. It is coiled like it really wants to go screaming higher. However, again, with the inability to do so after hanging around here for so long, you get back below here, and I'd be trading for the short side for first a test of this 30-10 level, which is the volume level from BOC last week, and then then we'll see. Okay, but this is a good level to target if you can drop back within the channel on dollar CAD. So this is a very clean, well-defined parallel. If you have a false break here, we would know it, because if we came back down here, then we'd be shorting like right up here, right? So that's what I'd be looking for. Oh, there we go. So cable back above 128 or 127.90. Came back up to 128.24, which actually was the week open. I'm sorry, I think I said it was 128.02. I lied. It is not. It's 128.24. So we just tagged that. So let's see. This is important, because when you get these Brexit spikes, you don't want to chase them, right? Or any spike for that matter, but especially these Brexit spikes. And what we want to do is we want to see. Wait, I'm going to wait the day out, right? We want to wait and see and get the market to close up here. Okay, if it closes up here, if we close above that 127.90, preferably 128 level, right? Then we will have what I talked about before, which is that tweezer bottoming pattern, and basically a nice line in the sand to be bullish with tomorrow with East, or with BOE on tap. Okay. Okay, so we've gone through what we need to go through for now in the currency world. Let's take a look now at our dollar yen, and then of course at Nikkei, Dow, S&P, all that good stuff. All right, so we are looking for a high here. I'm looking for a C wave high, right? A, B, C. I had kind of suspected that this might be the case. And you can see this is good tactics, I think, in trading, in that we kind of last week, as things started to break down a little bit. Yeah, I'll look at Euro Yen, Ty. As things started to break down, we were able to get into a short with a tight stop, right? And that way, once we broke, we could go to break even, because the risk is on a break like this, right, that it's a false break and it slingshots the other direction and screws you. So, rather than trying to get cute and pick the low down here, which I kind of suspected was going to happen, kind of worried about that, but we did bounced off a really good level. This is the high from back in May. And now we are back essentially at the high from July, okay? And we are putting in a nice 4-hour reversal here. So 113.45 was the level we were looking at for the short. Currently high is 13.38. I'd say that's probably good enough. You just look to the left of the chart, you've got some really solid just levels here. I mean, you got this high, 13.29. Got these lows over here, these highs over here. So you can see we're coming off of a good spot for something to happen, okay? And not only are we 1618 or 61.8, excuse me, of this leg down, but if you do an extension, wave A and wave C, you can see 1341 is 1618. So this is about 1618 of that, okay? That is a relationship that's quite common, okay? Habib saying is Q short here. Well, this morning, Habib, are you on the private Twitter feed? Yes. Okay. So I was noting this morning that we were looking for or sorry, what did I say? Yeah, 170.90 as resistance, and we did trade 170.89. So you can use that information for that type of, those types of short-term things. When I'm throwing out levels out there, it means I'm looking for something to happen at that level, right? So that's the deal with dollar yen. We're looking for a top and a C wave, basically now. May just happened, okay? But if we go to the Nikkei, we are, as I speak, we are at the um, essentially the level we wanted to see resistance. Okay, that is the low from here, November of last year, November 15th, and August low of this year. So what do we got? Okay, I want to show you something else real quick on this. So this is some momentum stuff. This is a 4-hour chart. Okay, as we all know, during kind of bear periods, we do like to see a lot of times. You like to see, resistance. When price is at resistance, you like to see RSI kind of pressing 60 and rolling over, and we are getting that now. So this certainly jives with what I would call, a bear market rally. The question, of course, is, and always will be, is the bear market rally, is the bounce over? I unfortunately cannot answer that with any sort of certainty, but what I can answer or say is that that's what you want to look for. I have a set resistance here. I'd be looking for a pullback here. The level that you'd look for support if we're in a larger corrective upward swing is probably 21,249 because that's the daily, the close of the low or the daily low, right? When you made the low that day, that's daily reversal support. So that's where I'd be looking at if you pulled back from here for some sort of support. It's also the 618 of the move up. Okay, so I do think that we pull off some here at the same time, with the degree of kind of pessimism that has attended the recent sell-off. I would not be surprised to see us try to move off of this, and then eventually we get a three-wave move up, this being an A, a B, and a C, and you get back up into that, that 200-day average. And by the way, I think the yearly open is somewhere up around here as well, isn't it? Yearly open, it's actually over here. Never mind. All right, so that's where I'm at with the Nikkei. Habib was just asking about the Qs this morning. I said 170.90 because you have the high from Jan, the high from May. It's just a good level, okay? Could you squeak up a little bit into 170, 140? I suppose 170, 140, but I have some shorts on from set 170.90, and I'll be looking for us to basically get 167.80, which is right here. Okay. Habib saying, so it's a good short. Yes. So Habib, from anything between this 170.90 and this underside of this trend line, which is 171, 40, 171.50, to me is indeed a short. And we can take it a step further. We can look at the very short-term channel that we've been paying attention to. Oh my goodness, that thing just blew my ear off. Okay, which is this. Okay, so I think you probably roll over here. I mean, you can see how beautiful that is. With what I say, 167.80 as a level to pay attention to. It's actually a little cleaner when I look at the futures or the NAS 100, right? So the NASDAQ 100, NAS 100, which is the CFD, which I'm sure some of you do trade. This is that chart. You can see the resistance is a little higher here. It's more like 70, 40, 70, 36. And on that, I'd be looking for support down near 68.57. But, simply you kind of want to trade these channels until they don't work anymore, right? And, I have an idea like of what may happen as far as, and I'll bring that in here in a little bit, but, we're able to, as time goes forward, we're able to eliminate some of the analogs, right? So we had the possibility of the immediate crash analog. That's obviously not the case anymore because remember, that was written last week. That was going to happen Friday and Monday. Didn't happen. Okay. So we throw that out the window. And now we're back to essentially this one. This is the 1929 analog. Okay. It's saying that we're essentially kind of, trying to turn up maybe higher on balance through November 7th, and then you take it seriously. Okay, so that is something to keep in mind. But yeah, these are the short-term charts. As far as the short-term charts are concerned, you just need to trade the channels. You don't want to think too much about what your analog is saying or whatever, right? You just want to trade these levels. And at this point, this is a level that, look, you've got to be a seller up here. You just do. Okay, you got the gap, you got resistance, etc., etc., etc. S&P, absolutely beautiful. Wrote this morning, what did I say, 27 something to 27.29. You see what we just hit? That red line, follow that red line, follow that red line, follow that red line. Look at that. That's where we are. So the level here saying I'm looking for us to come off here, right? It's a lot like the Nikkei. I'm looking for us to come off. At the same time, I would be, I'd probably be looking to support down to the 2640s. And maybe get yourself a little A, B, C, get up here some point early next week into that November 7th period, and then you can get real serious about, a big short, right? In the meantime, kind of trade it back and forth. Let's look at, sorry, I got distracted. Let's look at the Dow, because, so those of you, I know that you have the special report. From a couple weeks ago. And I've said time and time and time again how major and important this level is on the Dow, right? This line here, very similar. The action we're seeing now is very similar to what we saw back here, except it's a little bigger because the time is taking longer. You're looking at, new high on the long-term parallel, support right on this parallel, new high on the parallel, support on this parallel, right? Bounced for 3 weeks, little less than 3 weeks, 3 weeks on the bars, but more like 2.5. And look where we are right now. I mean, really, it's perfect. So we're looking at this, and the Dow has kind of gone, the Dow has been the stronger one. It's gone through its level here at the 200-day and whatnot, and you can see that, clearly it's the stronger leg. right, as compared to, say, the NASDAQ, which is the weaker leg and has been leading on the way down and also getting decent, counter trend rallies, but bigger on the counter trend rallies, which is kind of a warning, right? So my thing here is I wonder if we do get back to this 25,870 level in the Dow at some point. That would be like early next week. And you're going to see the same thing here that I have been talking about. Maybe getting an A wave up here, pull back in B, one more higher in C. So a lot of things are starting to take shape in terms of possibilities for a very large decline, right? We had the large decline first. We're getting a sharp, a sharp counter trend rally, probably in its early stages, but you don't know that, right? Like you do want to be putting on some shorts here because you don't want to miss the boat, so to speak. You can't be perfect with these things. But if I had my way, I would say that we have kind of a 5 waves down, 1, 2, 3, 4, 5, and that we're going to go into a 3 waves up, and that's going to be A, B, C, right? Most of A would be considered done here, but you can see that it probably needs to stretch into 5 itself. And say, why would I say this is 5 down instead of 3 down, right? Because you could say this is A, B, C. Well, there's a couple reasons for that. One is, if I look at XLI, XLI is the industrial ETF. So essentially the Dow, but you can see that this is clearly a 5, right? 1, 2, 3, 4, 5. Okay. If I look at XLF, which is the financial ETF, you can see from the top up here in September, 1, 2, 3, 4, 5. Right. So the weight of evidence to me, and from an Elliott standpoint, kind of leans towards this, treating this as an impulse on the downside, right? Say, rather than calling it a 3-wave drop. Okay. Some other things to pay attention to. The largest stock in the world, right? Apple. Apple has earnings tomorrow after the close, right? Largest company in the world, probably pretty good to know what's going on there. With Apple, I've got the short-term chart here, but really my focus is on the longer-term picture, and specifically like a weekly chart, right? So this is the really long-term parallel, 1998, 2003. You've got the parallel here from the 2012 high. You can see what happens crossing these levels, and we've been trading around it. And if I go to a daily chart, you can see it was actually support a couple of times here earlier this month, right? That was October 11th. That was a little bit of a low. October 18th, and then we flushed and then came back through it, and we're trading around it right now. This reminds me a lot of the silver chart from the really long-term silver chart. So here's the really long-term silver chart, right? Same idea. You have that long-term parallel. And then what happened? We went up through this and we spiked up. Now, it was much cleaner and violent back then, but you get the idea. We went up and spiked up through the long-term parallel, came back below it, crashed, came back, it was resistance. So that kind of dynamic is something that I will be watching for in Apple. Okay, so again, earnings are tomorrow in Apple after the market closed. Would be aware of that because you could get quite the impact on the market in general, right? I mean, Apple's like in every ETF. I mean, it's crazy. So going to want to know what Apple's doing after hours and heading into Friday morning because they're Thursday after the close. Okay. All right, so I've kind of gone on a tangent here, but I do think it's so critically important to understand some of the things happening right now in the equity markets. So, a lot of times our focus is elsewhere, but right now it's got to be where the money is, and that's where it is. So let's take a look at Euro Yen because I did have a question from Ty on Euro Yen. Well, Ty, I would say with Euro Yen at this point, what we're on here, this is linear scale and this is log scale. I don't have much of an opinion on Euro Yen here. A lot of times there's just not the best answer is just like there's nothing to do. But I will offer levels, and this is one of them. So that is daily reversal support at 25.64. If you crashed into there, kind of be thinking support. We literally are in the middle of nowhere right now, but resistance would be back, in my opinion, probably up at about 29.90 on this chart, okay? And that's going to be, you can see the parallel here, 200-day average is up around there as well. In terms of pattern, don't really have much of a grasp on it at this point. Right, I'm kind of looking for a broader dollar turn. So it's kind of tough to say, but it's also if we have a more of a corrective upward three-wave swing into next week in equities, then you might actually get a drift higher, right? As euro maybe finds a better bid than dollar yen does a drop, even though we're looking for the dollar yen top up here in the C wave of the flat. So again, I would just give you those two levels in terms of things to look at. Basically the trend line back here, okay? It does channel perfectly up into the high for February of this year. So, that is something to recognize. Like there's a market's trading on this angle, right? That's what I'm trying to get at. And that is a pretty good, if you just look across the chart, $13.45 level was missed by about 6 pips. So 4-hour reversal, I'd expect that we are able to get a short off here later today or tomorrow. With, this reversal, we'll be looking for resistance on a little mini bounce. All right. Have a great rest of your week. Again, have a safe and happy Halloween if you are into that sort of thing. And I will talk to you guys next week. All right. Take care.